Tyler, great to have you. So as investors try to navigate this volatility, you say it's important to have a long-term plan for your investments. How do you develop and stick to a long-term strategy when there's so much volatility in the market?
Well, I think it all comes down to what your risk profile is. Because at the end of the day, if you're not willing to take on the risk or you don't like the risk, then we need to dial it back. And so that's where the plan comes into place. And that's really the starting blocks for that, is understanding, where does that risk lie? How much money are you willing to risk? Because, when you think about it, what I always try to tell our clients is, at the end of the day, put it in dollar terms, right? We can talk about 10%, 15% all day long. But when you put it in real dollar terms for them, and you say, maybe out of a $100,000 investment, if you lose $15,000, how does that make you feel, right? And trying to elicit that emotion from them, because investing becomes emotional. As much as we want to talk about it being rational, it's very hard to do. And so trying to develop that long-term goal that meets the risk objectives of what they need, but also understanding, what are their long-term goals? What are they looking to travel? The types of things that they want to do. And so that's really the baseline for that, of creating that long-term plan.
And I've talked to some folks this week who are so concerned about the market volatility under this administration that they're pulling out of their investments entirely and looking into just a straight up high yield savings account. How do you rate that strategy?
Not the best. It's when it comes to investing, it's hard to time the market. The more important thing is time in the market, right? Because over longer periods of time, we see that the market goes up. Yes, some years you get 20%, some years you get -5%, but generally speaking, the market average return is about 12%. So if we're trying to time it, it's a very hard thing to do, and even professionals can't do it. And so try and focus on the long-term plan, and that's really where that long-term plan comes in, is because you need to keep that as your baseline. The last couple of years, let's take it back even further. Let's look at the last 5 out of 6 years, going all the way back to 2019. We've had 5 years that have been 18% or higher in the markets. So that has been a very strong market to be invested in. And so just understanding that you're probably already ahead of your long-term plan. And so it's okay to rebalance and dial back risk, but trying to time the markets is a very hard thing to do.
It certainly is hard. Another thing that's challenging is stock picking, but luckily we've got you to do it for us, Tyler. Talk to me about Broadcom in particular, especially ahead of earnings. What's your base case?
Yeah, base case, I think they have a great report tonight. I'm really looking forward to the commentary around their ASICs division. We heard in the last quarter that they're adding 2 more companies to their ASICs division, and Hock Tan didn't want us to include any of the expectations of what those 2 clients could bring to the ASICs division, but yet the company gave us a $60 to $90 billion SAM, so it could be a very good quarter, and I'm really hoping we get some updates on potential growth for or ramp for those 2 companies that they're adding for the ASICs division.
And talk to me about Meta, another stock pick of yours. What are you seeing there?
Yeah, this is another AI play, but at the end of the day, when we think about who is actually monetizing their AI, yes, OpenAI and Claude and Anthropic have monetized their models, but from a public investing community, we can't invest in those. And so we have to look to the public markets to see who is the forefront, who is the leader in the AI space. And I really do believe that Meta is there, right? We already heard the last quarter that they're starting to monetize their models. And on top of that, it's not like they're stepping off of the gas on CapEx spend for AI. They're going to spend $65 billion again this year, and I'm guessing it's going to go up next year as well. So they're at the forefront. They're going to continue to invest in this space, and I would be a buyer on this pullback here.
All right, Tyler, buying the dip. Thanks so much for joining us today. We appreciate it.